So yes, sir, we are live, and we would be waiting for our viewers to come.
Mm.
I will. Uh, yes, sir. I think then we can start with our session. Just a minute, sir. So let's start. Shivangi, let's start.
One of the very nice things about the stock market is that you learn all about the different aspects of the economy. It's your window into the large world. A very pleasant afternoon to all. I, Shivangi Gulati of the Public Relations Committee at the Essential Talk, welcome you all in this webcast. Before we start with the much awaited words from our delightful guest, Mr. Rajat Prasad, I would like to start by saying that the people who have excelled in their life have experienced failure as well. Life doesn't stop at failure since it has always been something beyond it. Be it sports, academics, or the stock market, if things are not working as per your plan, then it is rightly said that you should change the plan and not the goal. Now, I take the opportunity to introduce and welcome our guest for this session, Mr. Rajat Prasad. He's the CEO of Prashanti Forex. He's a certified treasury manager coupled with extensive experience in managing trading, hedging, and arbitrage portfolio in stocks and all major currencies, as well as managing various foreign exchange risks. He's on panel of BSE Risk Management for guiding exporters and importers on managing currency and interest rate risk. He's been trading in the stock market and currency market since 20 years and has successfully generated additional revenue by actively investing and trading in the stock and currency markets. His professional experience includes working in the Bank of India for 20 years and being a group treasury head in a leading multinational company for 11 years. He's been taking sessions of MBA students and working professionals on treasury and risk management with BSE Institute, Institute of Banking and Finance, National Institute of Banking Management, and Bankers Training College. Now, I would like to mention our host for the day, Mr. Harshit Chopra, and without further ado, I would now request him to start with the session.
So thank you, Shivangi, for the lovely introduction, and hello to our viewers and listeners, and welcome back for another episode of the Essential Talk podcast. Today, we will be discussing a topic which has been in limelight, or we should say, like it finds its way to stay in limelight, and that topic is the stock market. And this has been known to people for a long period, and many people have been regularly participating in it. For the same, we have the following guest, Mr. Rajat Prasad. Welcome you, sir.
Thank you.
So, sir, how are you?
Fine.
Then, can we begin with our session?
Yeah, sure.
Okay, sir. So, sir, I'm also new to the world of the share market, and I believe there would be many others out there like me who, like, whenever see the terms like the stock exchange or the share market, right? We often get confused between them as these terms are often interchangeably used. So, can you put some light on the difference between them?
So, share market is basically the market where the shares of a company are bought or sold. So, in olden times, when there was no computers, no internet, no what you call market where you can go and find out the buyer, you have to physically go and look for a buyer or seller. So, if you have to buy, you have to manually go and search for a seller. So, this was a very time taking process, and in this process also, you do not know that what is the correct price of the share which you want to buy or sell, because there is no information, there is no screen. So you have to depend on your instinct. Slowly, when the digitalization came in place, computers came into place, came into place. So a electronic platform was devised, which is a stock exchange. So stock exchange is the market where these shares are now exchanged. So they are bought or sold in the market, which is a stock market. So shares is the instrument, and stock market is the place where these instruments are being bought or sold.
So you explained the difference between the share market and the stock exchange very. So just a second, sir. I'm having some internet issue. Just a minute, sir. Sorry, sir.
Mhm.
Sorry for the inconvenience, sir. There was
It's
some
okay.
connection issue at my side. Right. So moving ahead, sir. Why should the general public know the difference between the stock market and the share market?
See, stock market and share market. So stock market and share market is the same thing. There is no difference. Stock exchange and share market is different thing.
Okay, sir. Then why should they know the difference between them? Like,
Why
how is
should
it
they?
relevant to them?
No, no. See, suppose you have to buy or sell shares, then you need a market. So that is a stock market. So that is the
Okay, sir.
difference. So they are not the same thing.
Okay, sir. So you have explained that concept very well, and I believe that our viewers and audience would have also understood the main difference between them. So moving ahead, sir. The share market can be confusing place for a person who doesn't have any knowledge or prior experience in that particular field, right? And investing in the market is not as easy as it looks. In fact, it requires the right knowledge and information to be able to get a decent return from the investment, which one has made. So, to what extent do you agree with this statement?
See, unless you know which shares to buy, which shares to sell, which company is going to perform very well in the future, you should not enter into share market just because others are investing in the stock market. So first you have to understand what are the shares. So I am giving you a very simple example. You have suppose 10 apples and you are
Yes,
not
sir.
hungry, and you want to have earned some money. You are short of money, you need some money. So what is the option? That you sell 5 or 6 apples to somebody else and take money from them. So you are sharing your resources, your profits, your assets to somebody else to get money. So share is nothing but a portion of company which is giving to somebody else. So if you are becoming a part of a company, then you should understand that if the company is going to do well, then only I am going to get good money. Your video is off.
Sorry, sir. There's some connection issue.
Mm,
So sorry, sir, for the inconvenience to our viewers and
mm,
you, sir. So, sir, that's up. Now you have explained the concept of this share market and the stock exchange very well. The
mm.
next question, which arises from the term share market, is the term shares. So, what exactly are shares, and how is it important to us?
See, share is nothing but a portion of company. So suppose company has assets worth 2 crore rupees, and these assets are with the company. They are company's owners, that is promoters and uh, people known to the promoters, the people who are main people who are running the company, they are having the shares. Now suppose they want to raise some money from resources to extend their company, to grow their company. So what they do, they give out of 2 crores, let us say they decide to give away 50 lakh rupees of worth of shares to common people, to everybody.
Sorry, sir.
No, it's
Uh,
okay.
um,
Uh,
like,
so,
sorry,
so
sir.
what happens? What happens then? You are buying a portion of the company. So you are in a way having, let us say, 1% share of the company. So if the company is growing, then you are growing. If company is not performing well, then your value of your share will not grow. This is the main thing. So you, whenever you are investing, you should always see that if I am today becoming a part of the journey of a company, whether this journey is going to be fruitful in next few years, or is it worth investing in this company for next few years. That is the main theory when you should invest in some particular company.
So, you have explained this concept very well, like what are shares and why do companies actually need those shares.
Mhm.
Now, moving ahead, sir, with this, I would like to understand like the main difference between the types of the companies on the basis of the the size and the capital.
Mm. So basically, there are three type of companies which are available in the market. One is large cap companies, one is mid cap companies, and one is small cap companies. Now, cap means market capital. Now, suppose company A has issued 10 lakh shares, and value of each share is 10 rupees. So market capital will be 1 crore.
Okay, sir. And how would that work for the mid cap and the small size cap companies?
Similarly, so there are three what do you call categories of what you call companies: large cap, mid cap, and small cap. So they are divided on the basis of value of their shares in the market. Now this value is, I will tell you. So large cap stocks are basically very big companies,
So,
and they are having a market capitalization of 20,000 crore or more. So the value of their shares is more than 20,000 crores. Now, mid cap companies where the value of their shares is more than 5,000 but less than 20,000 crores, and companies which are having a value of less than 5,000 crores, they are called the small cap companies. So this way, there are three type of companies. So obviously, very big companies, they have already grown, so the scope of very fast growth is less. Mid cap companies, they are not grown so big that they cross the value of shares is crossing that 20,000 crores. So they can grow faster, but the chances of, see, it depends on what type of investment are you going to make. Suppose you want to invest in very safe companies, then you should choose large cap companies. Why? Because these companies are very large. They have already in market for, let us say, for 20 years, 30 years. They have proven track records for so many years, and they are going to survive. The bigger the company, lesser the chances to fail. Although it is not sure, it's not certain. So if you want to have a safe investments, you should go for large caps. If you want to grow a little faster, you should go for a mid cap companies. And small cap companies is very small companies who have just entered the market and they are trying to grow bigger. So these are
so,
the three
sir,
type of.
yes, sir, you can continue further.
Tell me.
So, the question which I had, when you were explaining this is that we
Hmm.
often also see the companies listed as penny stock companies and blue chip companies.
Hmm.
So, could you also explain that to our viewers and
So
listeners?
blue chip companies are large cap companies who are performing very well for last 20 years, 30 years. They are growing year by year, let us say by 10%, 15%. So blue chip means very good companies who have proven track record, like Reliance,
Yes, sir.
Infosys, TCS. They are in this market, HUL, Hindustan Unilever Limited.
Yes, sir.
So
Yes, sir.
these companies are there for last 30 years, 40 years, and every year their performance is, they are able to give good performance year after year. That is why they are called blue chip companies. Penny stocks is the very stocks whose value is only 2 rupees. So you can buy one share of that company in 2 rupees. Now this 2 rupees can become 10 rupees or it can go to zero.
Okay, sir. So, sir, do you think is it worth investing in the penny stock company? Like it's very volatile sort of. Like if you invest, you might get good returns. If you again invest, you might not get returns, good returns
The
on that. So is it
the
worth it?
The problem with today's world is everybody wants quick money. They want to become overnight rich.
Yes, sir.
So, so these type of people, na, they invest in penny stocks. That they want that okay, today my investment is, let us say I will invest only 100 rupees. They will become 1,000 rupees within 1 year. But these penny companies, when they rise from 1 rupee to 10 rupees in 5 days, and then they fall from 10 rupees to 0 rupees in the next 5 days.
Right, sir. Right, sir.
So
So,
if we see in stocks, you should always, investing means you should have a vision of at least 5 years, not
so
one day
that's
or
the
2 days.
minimum period which you are suggesting
Yes,
us.
yes. So if you have to invest, I'm not talking of trading. I'm talking of investing in stock market. See,
Okay.
any company, if it is a good company, see what is the growth rate of India? Growth rate of India is around 8% GDP growth, which includes the agriculture portion also. This means good companies will grow at the rate of 15% to 20% maximum. So that means the value of their share will also grow by 15% or 20% in 1 year. You cannot expect it to double within a period of 2 months or 3 months.
Right, sir. So, the question which also arises when we understand the concept of the companies is the Nifty 50 and Nifty 100, right? Right.
Mhm.
So, if those of those viewers who watch are regularly watching the news of
Yeah.
the share market,
Mhm.
they
Mhm.
might be seeing the terms Nifty 50, Nifty 50, Nifty 100, right? So,
Mhm.
could you also elaborate that thing?
So basically, Nifty 50 is nothing but an index formed by the exchanges to ascertain what is the mood of the market. See, there are thousands of stocks. Now, some stocks are rising, some stocks are falling. So, if you are following only one stock or two stocks, or let us say 10 stocks, those 10 stocks will not give you the broader view of the market. Now, what they have done, they have chosen 50 companies, top 50 companies of what you call from the different sectors, and they have formed, given weightage to every company. Let us say Reliance will have 10% weightage, TCS will have 5% weightage, then Infosys will have 2% weightage. Similarly, and accordingly, their share value into the weightage given to, percentage given to them. So it arrives at some number. So
Right, sir.
that number can be 14,000, 15,000, 16,000. Now, when market goes from 14,000 to 15,000, means Reliance will, if it market is going up by 1,000 from 14,000, that means around uh, 5, 4, 3, 4% rise is there. So all the shares which are in Nifty 50, they are expected to rise 4 to 5%. Some may
Right,
rise,
sir.
some may fall also. But it is giving a broader view of the market. 100 means a mix of 100 companies and forming a index. Index means there is a value which shows that yes, today Indian market is going up or Indian market is going down.
Going down.
Yes.
Right, sir. So moving ahead with the questions, sir, now you have explained the basics of the share market very well. I'm now interested in to understand like how exactly the share market works.
So whenever a company wants to raise money, it issues shares to common public.
Yes, sir.
So when it goes to public for the first time, it is called IPO. You must have heard this term in the last 1 year many times. That IPO of XYZ company is coming, IPO of Zomato is coming, IPO of Paytm is coming, IPO of Adani is coming. So these companies were never listed on stock exchange before. This is the first time they are going to offer their shares to the common public. So this is the IPO, initial public offer. In this, they, let us say I want to give away 1 crore shares. So
Sir.
only 1 crore shares will be allotted to people. Now, if you apply for the share, let us say you apply for 10 shares, you may get 1 share, you may not get two, you may get 2 shares, and sometimes you even don't get any share. So it is a pure lottery system. Now, after this shares are listed in exchanges, whether it is National Stock Exchange or Bombay Stock Exchange. So these shares are available for everyone to buy or sell. So if you are not having, you are unlucky not to get shares when the company offers it initially. Later on, you can buy or sell shares in the secondary market. Secondary market is market which is providing liquidity to the shares. So anybody who has bought, let us say, in the IPO, they have got 10 shares. Now, where they will sell? This is the secondary market where they are going to sell. And when they are selling, somebody else is ready to buy it.
Right, sir. So, sir, do you think is it worth investing in the IPO? Like as you said, one might be lucky. If he invests, he might get the allotment of share. If
Hmm.
he again invests, he might not get. Right.
Hmm.
So, is it worth investing in the IPO during its
Yes,
launch
it is
period?
worth investing because what happens, share price are, when you issue a share price, there is a price band defined at that point of time, that this share, when I am going to offer you this share at 120 rupees, for an example.
Right, sir.
But when the stock market opens on the first day, that share may list at 140, 150. So immediately you are getting 30 rupees or 40 rupees gain in on day one. If you are getting that share, so it is quite possible that you are getting 30 to 40 rupees gain on the first day only.
So,
That is the advantage. So it is giving you an instant reward, but it is a lottery. So maximum individual investor can invest is 2 lakh rupees. And in 2 lakh rupees, suppose they get, and because if the demand of share is very high, so they will not get the entire worth 2 lakh rupees of shares. They will get either 10,000, 20,000, 50,000, depending upon how many people are in run for the shares. So suppose you are getting only 10 shares and for 50,000 rupees, and it goes up. So you gain on day one only. That is the advantage of investing in IPO. But you have to be very careful while selecting which IPO to go, because like Paytm, the moment it is listed, it listed in a discount.
yes, sir.
So the share price was offered at, let us say, 1,000 rupees, but it opened at 800 rupees. So on day one only, you are losing 200 rupees.
Right, sir. So, like, as you use the term discount, when you were giving the example for Paytm, so are the shares also issued in any other format, or are they issued on the discounted price?
No, 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 not offered. See, what happens, I am offering my share at 100 rupees, but market is not ready to buy at 100 rupees. You are getting my
Okay,
point?
sir. Yes, sir.
See,
Now I get the point.
so the company is saying that my worth of my share is 100 rupees. But when it goes to market, people don't think that this share is worth 100 rupees. So they will not buy it at 100 rupees. So on day one, what happens? There is no buyer at 100 rupees. So what happens? Somebody says, okay, I will buy it at 50 rupees only. Now the person who has bought at 100 rupees, what he will do? Either he has to hold the shares, or he thinks, ki, chalo bhai, I am getting some money. At least my entire money is not going waste.
Okay, sir. So moving ahead with the our session, uh, sir, like recently, there was a merger which happened between Air India and Tata Sons, right?
Yeah, yeah.
So according to you, like, are you know, so according to you, how would that affect our share market?
No, it will not affect the entire share market. It will only affect the price of the two companies which are involved in the merger. So suppose there are two companies, Tata, you have to give an example of Tata Air and
Tata Sons
Air
and
India.
Air India.
So let us assume Tata Air is also listed on the stock market at 100 rupees. Air India is listed at 200 rupees. For example, at the time of merger, the price of first company is 100 rupees, second company is 50 rupees. Now, when they are merged, it is decided in what ratio the share will be exchanged. So let us say the ratio is 2 is to 1. So for every one share of Air India, oh sorry, two share of Air India, you will get one share of Tata. So
Okay, sir.
if if let us say Air India share is more than 50 rupees, then you are benefited. If the value of Air India share is 40 rupees, then you are at loss, because you are giving away 80 rupees of share, but you are getting only 60 rupees of worth of Tata Air. So the price of only two companies, two what you call companies which are being merged, will be affected, not the entire share market.
Right, sir. So now, you have told us a lot about the share market, the companies, and the size of the companies. So now I, as an individual, want to start invest in the share market. So what would be the platforms where I would be doing that?
So there are two platforms available. One is National Stock Exchange and Bombay Stock Exchange. These are exchanges, and then there are brokers. These brokers become member of these exchanges. They have to pay some money to these exchanges, because exchange wants to ensure that the money of the investor is safe. So they are keeping some what you call money as a what you call initial money to protect the rights of the investor. So you have to go to a broker. Let us say you go to Zerodha, you go to Motilal Oswal, you go to
Yes, sir.
Nirmal Bank, you go to any broker who is a member of our exchange. You open an account with them. They give you a platform where you can see the prices of the shares, and there you can go and buy and sell the shares.
So, sir, why as an individual, why I as an individual should know the difference between the BSE and the NSE? Like, is it
So
important to me?
no, there is no difference. They are basically two different exchanges.
And then how would you differentiate between them? Like, sir, कुछ तो difference होता होगा नहीं कि Bombay,
No,
why BSE and NSE? Why
so
not only
BSE.
one?
No. Actually, what happened? BSE is the oldest stock exchange. So BSE was there when the stock market started, and initially it was a physical market. Physical market means you have to practically go there and buy or sell on the floor. There was if you have seen the movie, old movies, there is a one person going in the floor and asking, "I have got 10 shares of Reliance. How much you are going to pay?" Like that.
So,
When
sir,
the
are they known as dalals?
Yeah, Dalal Street. Yeah,
Dalal
they were.
Street?
Dalal
So, no,
Street
no,
was the
no.
place, and the people who are doing this were called Dalals. Today, they are called brokers. Dalal is a term for brokers. So, Dalal is the person who, what you call, like today, it's a platform, electronic platform. Earlier, these people were going into the market and trying to find a buyer or seller for yourself. So, they are facilitating the buyer or sell. This was a period when it was physically done. So, Bombay Stock Exchange was operating in a physical market. But when the computers started, so a national stock and Bombay Stock Exchange was only Bombay, and there was similar stock exchanges at every state. So there was Kanpur Stock Exchange, there was a Lucknow Stock Exchange, there was a Guwahati Stock Exchange, Calcutta Stock Exchange, Delhi Stock Exchange. So these were various stock exchanges at the major centers across India, where physically you have to go. So suppose you are sitting in Mumbai, you have to go to Mumbai market and sell your shares. If you are sitting in Delhi, you have to go to Delhi stock market and sell. But the price of Delhi stock market and Mumbai stock market will be different, because the person sitting in Mumbai doesn't know what is happening in Delhi. To overcome this, National Stock Exchange was formed, a platform was formed, electronic what you call software was designed, where entire India was trading on the single platform. Slowly, Bombay Stock Exchange also uh, adapted this technology. Other stock exchanges, they simply closed down, because they this Bombay Stock Exchange was the biggest and the oldest, so he could survive. And again, they have to what you call centralize everything.
Yes,
So
sir.
that is how they are two stock exchanges. But today there is no difference. Today they
All
are
right, sir.
basically two different platforms.
All right, sir. So, moving ahead, Could you also explain the difference between investing in the stock market and trading in the stock market?
This is the what you call biggest thing which people are confused. The most of the people think that trading is and investing are the same thing. Now I am giving you a very small history of the market. This Nifty, when it was launched in 1996, the value was 1107, 1107. Then in 18 years, it reached 7,000 marks. From 1,000 to 7,000, it reached in 18 years. And next 8,000 points from 8,000, 7,000 to 15,000. It took only 7 years. So in last 14 years, sorry, not 14 years, 25 years, the stocks have gone 25 times. So if you have invested 10,000 rupees 25 years back, they must have gone into 14, one lakh
Wow,
forty
so
thousand rupees. So
that's a huge number.
this is investing. That means
Wow.
you are buying a stock and keeping it for long time. Now, again, as I explained that India is growing at a rate of 8%. So very good companies, they will grow 15% to 25%. That means you have to keep invested in this company for next 5 years, 10 years. It should not be that you buy today and you try to encash that after 3 months or 6 months. You will only have good returns if you keep yourself invested for 5 years, because in 5 years, if you see 15% growth in 5 years, it becomes around 75% to 80%. So your money is doubling in 5 years, which is not the case in any other instrument. And I am
Okay,
talking of big companies, good companies. If you invest in mid cap, the chances of it growing faster is much. Also, you should see what companies have performed earlier. That doesn't matter, because you should see what it is going to perform in next 5 years. Whether next 5 years this company is going to stay in the market, whether the company is able to survive for the next 5 years, then only you should invest. Trading is you buy today and you sell after 5 days. So there you can gain only very small amount. Share price may go up by 10 or rupees, 20 rupees. It will not multiply many times.
so sir, do you think is it worth, you know, even doing the diligence
Hmm.
for each and every company, or should
Yes.
we pick select particular companies and then do a work upon it?
No, due diligence means, see, first thing is there are many companies available in the stock market and they are in different sectors. Some are steel companies, some are software companies, some are what you call FMCGs company, then some are in area of agriculture. So first is there are different sectors which are available in the stock market. It is not that the all companies are working in the same area. Some are auto companies like Maruti, Tata Motors. So first thing is you should choose a sector which is going to stay for next 5 years. Like consumption, whatever happens, people are going to buy eatables. People are going to buy things for their necessary everyday needs. They have to buy food. So this FMCG companies which are producing goods like Hindustan Unilever, or people who are making what you call basic products, they are going to stay in the market. Their demand will never go away.
All right, sir. So you told us very key, crucial points for our viewers
Hmm.
to understand, and I hope they would be benefiting while
Another
they
thing
would be
is,
listening.
there is a saying that do not put all your eggs in one basket, because if that basket falls, then all your eggs will be broken. That is why you should always diversify. Even if you are choosing 10 sectors, let us say you say, okay, I will put one tenth of my money in steel sector, one tenth of my money in software sector, one tenth of my money in FMCG. Like, let us say you decide 10 sectors. In that, in one sector also, you should choose at least 3 4 companies. That out of the 10 rupees, 2 rupees I will invest in first company, 4 rupees in second company, 5 rupees. See, what is Nifty 50? It is a combination of 50 companies. It is not one company. So if one
Yes, sir.
if 5 companies are going up, one company is not performing well, still the Nifty will go up. So your entire portfolio, suppose you have chosen 20 companies in various sectors. 2 companies are not performing, but 18 companies are performing. So your portfolio as a whole will grow. If you put every entire money on single stock or single sector, and if that sector doesn't perform well, like in COVID, there was a lot of sectors which got affected. Car sales was zero. So if you have invested entire money in auto sectors, you should have lost the money.
So, sir, like, is it worth? Like, when would you tell our audience to invest in the share market? Like, when is the golden period during the COVID period, or there should be some extra activities, political activities happening. Then only one would be benefiting from it, or
So
there is no such period.
there is such periods. The Warren Buffett, if you have heard the name, he is called the investment guru.
Yes, sir.
He says, when everybody is fearful, you should be greedy. And when everybody is greedy, you should be fearful. This means when there is a panic in market, if you go to Panwala and he says, no, 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 don't invest in stocks, it is going to fall. That means everybody is having a panic. That is the best
Exactly.
time to invest. And when everybody is advising you, even your next door neighbor who doesn't know ABC of the stock, he will come and say, boss, you buy XYZ stock, it has performed very well in last 10 years. That means that is the time you should be very careful in at least buying your fresh stocks. There is one greed and fear index. If you go and search in the internet, you will find greed and fear index. It gives you an indicator that what is the market mood today, whether it is in fearful mode, it is in normal mode, or whether it is in greedy mode. So whenever it is in fearful mode, that is the best time to invest.
Right, sir. So now as we're discussing about the time period. So what is the time period one should have in mind, while investing in his hard-earned money in the share market?
So as I already told you, minimum 5 years.
So standard, is it like set par level? Is the five, the 5 year the minimum level with which one has
No,
to consider,
no, no.
or
If
can
you
the
have to
duration be
if you have
shorter?
to what you call, see what happens stock market. I told you there are phases when the stock market is not doing well. So it is quite possible that you invest today and for next 1 year it is not performing well. So you know should not lose your heart. If the company is good and if the Indian economy is growing, see two things why share prices go up. First, the economy of that country, like Indian economy, it is growing. Economy is growing, that means the companies are going to grow. Which companies are going to grow, that you have to do the due diligence, that okay, in next 5 years this sector is going to grow and this company is going to grow. COVID, every pharma company made a good money. So
Right, sir.
again, work from home, your all these software companies, they made good money. Similarly, today, when the COVID is going down, slowly everything is opening up. So your travel sector, your what you call recreation sector, your uh, sectors, they will start coming up because they
So,
have
sir,
taken a beating.
yeah. Right. So, now I'm like a uh, sorry, sir. So, as I was saying, the finance minister also recently announced the union tax budget, right? And in that session, she told that the government would be charging 30% tax on the profits which an investor has made, and 1% would be charged on the recipient to whom the cryptocurrency has been transferred.
Mm, mm.
So, would that be having any effect on the share market, or are they different from one
It
another?
it is a positive signal for share market because earlier there was no tax in the cryptocurrency. Whatever profits you were making, they were tax free, and people were investing in cryptocurrency just because it was going up very fast and people were able to make quick money without being taxed. In stock market, if you hold a share for long term capital gain is only 15%, which is even less than the highest what you call tax bracket. If you are having a salary, you have to pay 30% tax. But if you are holding a company share and if you make profit in long term, the tax is only 15%. So those who want to what you call suppose you are able to make 100 rupee profit in cryptocurrency, and if you are able to make 100 rupees profit in stock market also, obviously stock market is more what you call lucrative
Look at it, sir.
as far as the tax implication is involved.
Right, sir. So, like, as we are towards the end of our session, can you give us some guidance on what should be avoided while one is investing in the share market?
Mm. So first thing is you do not put all your eggs in one basket, which I have already told. So you should not go with your money and invest in only one company or two companies. Second thing, you must do your due diligence. Do not invest because some my friend has bought or my next door neighbor has bought. Always do your own research. What happens when the market is going up? Na, everybody will come and give you a tip. Buy XYZ company. It has grown in last 5 years. It has grown 10 times in 5 years. But is it going to grow 10 times again in the next 5 years? You do not know. So you have to do your due diligence. And how to do that? Go to internet. There are so many sites. There is value research, money control. You go to that site, find out top 10. Let us say you decide to invest in steel companies, top 10 steel companies in India. Go to their website, find out how the company is growing in the last 5 years, what are the future plans of this company, and there also they are giving what are the plus points of this company and what are the negative points of the company.
All right, sir. So, sir, as we are short on time and we have to wrap up with the podcast, so now we would be asking few questions which
Okay.
the audience has put before us.
Hmm.
So, sir, Tarush has asked, like, are there any upcoming IPOs we should look forward to?
IPOs, one is LIC, Life Insurance Corporation of India, which is coming. So it is a very big IPO. Government is giving away 5% of its stakes, and it is considered to be one of the biggest IPOs. But again, it is a lottery. You don't know whether you are going to get it or not. So that is a good IPO, LIC.
Okay, sir. Then, sir, Yatharth Kaushik has asked a very good question. Like a few businessmen who leave country after taking humongous loans from the banks, does it affect the share market in any way? I
It
guess,
affect
sir,
it.
because
It
Vijay Mallya
it
also did the same thing, right? He took
so
loan from
basically
the PNB Bank.
it creates negativity in the market and especially in that sector. Suppose Vijay Mallya has left, that means airline stocks were taken a beating after that. The
So
share
does
of
it
that company
increase the
will
price?
definitely go down.
Right,
But
sir.
at the entire share market will lose faith in the water system.
Okay, sir. I guess then it's better to stay away from such investments which one is doing.
Hmm.
Then, sir, the next question which Devishi Arora has asked is that with so many listed companies on the
Hmm.
Indian Stock Exchange, how
Hmm.
does one pick the excellent ones?
Again, I am telling do your due diligence first. Go to first you choose a sector. Let us say you choose steel sector, and you go to internet and find out top 10 steel companies in India, big steel companies. Now, let us say you get five names. You go to the site of these companies, you go to various portals like Money Control or Value Research, you read their research reports. You, if you are not able to do research yourself, then take advice of some investment advisor who will guide you. Okay, okay, this company is good. Why it is? And again, if somebody is giving you a tip, okay, boss, this XYZ company is doing very well, invest in it. You should ask, okay, you tell me how you say that in the next 5 years, this company is going to perform. Why do you think that this company is going to grow in next 5 years also? And if you are satisfied with that answer, if you are satisfied with the research which you have done, then you should pick that company.
Okay, sir. So the last question, which would be entertaining, is that Akansha Wadwan has asked, can I become a millionaire by investing in the stocks?
It depends on how much money you are investing. If you are money investing 1,000 rupees, you cannot become a millionaire.
But what if I invest that 1,000 rupee or let's say 2,000 rupee in a penny stock which costs around let's say 5 to 10 rupees? Like, it's just an example.
Hmm.
So now, would I be a millionaire? Would I be called as a millionaire?
See, again, I'm saying the mindset of making very quick money is not good if you are investing in stock market. If you are going to trade in the market for 1 or 2 months, then you should go for penny stocks. You should go for stocks which are very volatile. But if you want to create wealth for yourself, then you should be investing in stock market and not trading in the stock market. Trading in stock market, you have to have a what you call proper knowledge. You should learn the financial analysis, technical analysis. You should know when to buy, when to sell, how to see what is the bottom, what is the top. So then only you should trade. It is not somebody has said you buy this share and then you go and buy. For trading, you need a proper training to become a trader. For investment, you have to, and trading, you have to sit on screen from 9 to 5, 9 to
Gotcha.
3:30. You cannot trade if you're not sitting in front of screen from 9 to 3:30. For investment, you need not sit in front of screen because your aim is not to make money in 5 days or 10 days. Your aim is to make money in next 5 years.
Gotcha. So, sir, last question is asked by Web of Khanna. He is asking like how much time one should spend, on the share market to gain the maximum profits from the investment
I mean, in a day or the time period,
on a long term basis.
long term basis, 3 years, 5 years minimum. If you want to really get some good amount of returns in your stock investments.
Okay, sir. So, sir, this brings end to our session. I would like to call Shivangi back to our studio.
Okay. Thank you very much. It was undoubtedly a very knowledgeable session for us all. Now, I would like to call upon our president, Mr. Yatharth Kaushik, and vice president, Ms. Akansha Wadwan, for the vote of thanks.
Yatharth Kaushik.
Hello, sir.
Okay.
Indeed, sir, it was really a great session, and I'm really sure that a lot of people must have got a lot of clarity because I feel that a lot of people are now, just thinking towards the statement that one source of income is never enough. So a lot of people are trying to enter into investments and all. So people must have got a lot of clarity. And thank you so much, sir. Looking forward to more such episodes with you.
Thank you
Okay.
so much, sir, for coming up here and spending your valuable time with like inciting us. Personally, I had no idea about stock market till today, and I've learned a lot through you today. So all thanks to you. Now I exactly know what is stock market. So now the next time I'm investing, I'll keep you in mind. So thank you for having
Welcome.
for being with us today.
Thank you.
Over
Welcome.
to you, Shivangi.
Now, I would like to thank our very patient viewers for joining this session and making it a huge success. I'd like to end the day by quoting Paul Samuelson. In many ways, the stock market is like the weather. If you don't like the current conditions, then all you have to do is wait for a while. That's all from our side today. We'll be back here next week and we look forward to meeting you all again and sharing another fun yet extremely knowledgeable experience. Thank you.
Thank you, sir.
Okay,
Thank you,
bye.
sir.
Now,
Bye
All
bye.
right.
now we
Yeah.
would be ending a broadcast. Thank you, everyone.
Thank you.
Thank you.
Harshit, now we can end the live.
Yeah, एक सेकंड बस हो गया.